This is Bullish. I'm your host, Steven Van Metre, and thanks for joining me for part one of the Sunday Chart Show. We take a look at the S&P 500, Nasdaq 100, Russell 2000, and high yield bonds. And boy, have we got a bullish setup for the major industries. You're not going to want to miss out on this. Let's kick it off with the S&P 500. We start out with the breadth indicator, and what we see right now, 62% of the S&P 500 is above its 50-day moving average. And you have to remember now, when we see a cross of a security, could be a major industry, could be a stock, could be a bond, when it crosses above its 50-day moving average, that is a bullish indicator. And now we see 60% of the S&P 500 above its 50-day moving average, came off these really low point of 25%, and now it's moving higher. And we're not even back to one standard deviation yet. We touched it, it got rejected, but notice we have this one standard deviation area sitting right here at about 74%. And as I mentioned last week, we could see somewhere a rally between 4,600 and 4,700. We got up over 4,600. Now we're seeing a bit of a pullback, but don't hold off. This thing can go higher. Let's look at the percentage of the S&P 500 stocks above their 200-day moving average. It's seen at 52%. And all that means is half of the S&P 500 is in a bull market, half of them is in a bear market. And notice we've seen it come up here before and get rejected right around the 60% level back here February. Twice it happened, and now we're seeing here again in March as it comes down into April. What can we see next? Well, we're looking for, what you want to see if you're bullish on this, is a move back to the mean. Just get back to 75% of the S&P 500 above its 200-day moving average, and that would be bullish for price. That gets you that 4,700, maybe even higher move on the S&P. And now let's take a look at the historics, because is a move to the mean reasonable? Can this happen? The answer is absolutely. See, we're down here at 60%. We came off these lows around 35%, and historically, you see these moves from deep down move right back to the mean. There's a reason it's called the mean. So when it gets down here to this red line, this -1 standard deviation and bounces, well, that tells you there's got some legs to run on this. And how about the momentum indicators? Let's look at the RSI, the relative strength indicator, 57. That's good. We want to see over 40. Where is it at when it's overbought? Well, that's 70, and we're not there yet. So again, you're seeing technical backdrops here to support a move higher. How about the MACD? You see the MACD line, the black line is slowing down a bit. The signal line, the red line, is moving higher. But does that mean it can't keep going? No, because even we look back to November where we saw the MACD crossing back through the signal line, and people who specifically just traded the MACD would have bailed out and still made new price highs. So it's absolutely possible there's more upside even on the MACD. And Momentum Timer Pro, which is all over this, the new version 6.2, this is probably one of the most powerful trading tools out there, and it's still free, which is probably why people don't think it's a value. But what it looks like is three signals. Looks at the RSI over 40, the MACD positive cross, and Momentum Timer Pro's own internal proprietary indicator. If two of the three are positive, it flags a buy signal. All you got to do is sign up. I'll put a link in the corner in the description below. If you're on the list, when it does go paid, you will get a one-time substantial discount. And who knows when that will be. Let's take a look at the bigger picture, because this is really what I want to focus on, is the bigger picture is very bullish. Note the price on the 21 and 50-day moving average are positive, still positive. It's above the 21, 50, and 100-day moving averages. Those are good. And we're seeing positive signals on the 1, 6, 9, and 12 months still. Meaning it's just higher than the price was back at those intervals. And let's look at the price chart, because this is what changes everything. And we'll zoom out, and I want to show you this. We've got the 50-day moving average here in green coming down and bottoming. Now that's what you want to see. A bottom form as a moving average will flatten out. And because the 50 days kind of longer than, say, the 21 here in red, that's good. And the 21 days is bounces around a lot more. But you'll see that there's about to be a positive cross of the 21 through the 50, bottom going up. Here's the 200-day moving average in tan. It's providing potential support. The 100-day moving average is a little bit of resistance. It's been resistance in the past. But notice the volume profile over the last 6 months way up here, suggesting that we could see potential price move back near its all-time highs. Now let's zoom out to the 5-year chart, because what I want to show you, and we'll zoom in a little bit, is note here the red, and I will highlight the 21 moving day average crosses through the 50, the green, and notice you get a nice big run. Here it happens. Again, it crosses through to run, and it's about to happen. It happened right here. Crossed through, and we got to run higher. It's about to happen again, and that is extremely bullish. You'll notice on the 1-year chart, you've got the volume profile support below, and that's exactly what you want. Now, can we see a pullback in price here? Absolutely, and that would be okay. Don't be surprised if the S&P maybe pulls down. The SPY we're looking at here to back down into 450 or even into say 445 to catch this 21-day moving average rising up, or even if it comes all the way down and tags the 50-day and holds the top side of it, that is constructive as well. And that's what I'm telling you, this is bullish. Let's go on to the Nasdaq. We see a similar setup there. Notice the percentage of the Nasdaq stocks above their 50-day moving average surged to a +1 standard deviation, got up there to 73%. Or almost 80%, and is now hovering below. This is a bullish chart setup here on the breadth indicator. Remember, I said last week it could get into or above 15 to 15.5. Well, got up to 15.2. So there you go. How about we now look at the 200-day moving average? There's still a lot of weakness here. So still a lot of the Nasdaq's in a bear market is sitting right around 42%. You can see that here. And where does it need to go just to get back to the mean? Again, we're talking about getting to the mean. You're at 65%. That tells you you're looking Nasdaq now, 16,000. So, a lot of people are looking for kind of, a relief rally and a move higher. And well, you could get it. And those, when the Nasdaq gets down to these levels where we see, 25% of the 200-day moving average above its 200-day moving average, it's really, that's a bearish picture. And when it gets down there and bounces up to the mean, well, there's your price surge for the that's the Russell 2000 chart. Somehow something got goofed up here. Anyways, we'll just pretend that didn't happen. Maybe it's sitting under the Russell one and I pasted in the wrong spot. How about the RSI, relative strength indicator? It's at 57. That's positive. Again, supporting price going higher. How about the MACD? It's got a positive indicator too, suggesting the price can still go higher. Momentum Timer Pro, 12 consecutive buy days. All you had to do is be on the list. You would have known that. And similar story here to the S&P 500. Price bullish on the 21 and 50 day, just below the 100-day moving average. Is that a big deal? Well, not really. Let's take a look here at QQQ, because notice you have the 21-day moving average getting ready to cross the 50. There's plenty of volume support down here into the 350 range. So could price come down, tag the 21-day coming up bottom of or the top of the 50-day, and that'd be bullish? Yeah, now you're looking to shoot higher back to the all-time highs. Again, very bullish setup there for the Nasdaq as well. Now let's take a look at the Russell 2000, and actually look at the Russell 2000, because here's 52%. It's above its 50-day moving average. Still could get up to this 2 standard deviation mark at 70. It's got strong momentum here, and it's been building a base, and this is key what we see here. How about we look at the percentage of Russell 2000 above their 200-day moving average? Still, most of the Russell is in a bear market. 65% still in a bear market. And that isn't telling you that there could be just a move, right up here to, 45%, maybe, not even up to the mean if it got up there. But notice the first move we can come back to is where it was in January. And so there's still a lot of momentum building behind here. And as we looked at before, the percentage of Russell 2000 stocks above their 200-day moving average, well, it's got a lot of potential upside just to get up to the mean, and it tends to do that when it comes off of these low levels. Here you see around 45% and then up into 60s. So there is a lot of momentum that is building here that could take the Russell higher too. And the RSI, It's over 40, still building strength, needs to get to 70 to be overbought. How about the MACD? Still positive sign. You see the MACD slowing down just a little bit relative to the signal, but not a big deal. I mean, we saw that happen back in late October, early November, and there was still a surge higher in price. So you can absolutely see that. And how about Momentum Timer Pro? Consistent. Well, that 12 consecutive buy signals. So all you had to know was, well, 12 days ago, be on the list. It would have told you. Price is bullish on the 21 50-day moving average. Momentum starting to turn. Now that's good. And we like to see momentum move before price, but that it doesn't always go that way. It's above the 21 and 50-day moving averages, and you're about to see there is a positive cross, and that is what you're looking for. See this positive cross here? Now look at the volume profile, 6 months. That's telling you there's support here. So even if price gets rejected here at 207 on IWM, comes down to 200 or 201, holds or thereabouts, holds that 50-day moving average, that is bullish to send this thing even higher. Now you're talking, 226. You're talking to move, all the way back up to the supply zone up here. And so that, again, very bullish picture for the large caps and the small caps. Now, what's one thing that's holding this off is how about junk bonds? You notice HYG nowhere near overbought conditions, hovering around 50, still could move higher, but momentum, it's just not that strong. It's kind of run out of steam around this 50 mark before, needs a boost. How about the MACD? It's got a nice positive move here. But the price chart, well, it doesn't look quite that bullish. How about we look at the longer term views? We'll zoom at the price chart. Price bearish, cross the moving average. It means they're trending lower. Momentum is validating, heading lower. It's only above its 21-day moving average. So a little bit of green and a sea of red. Now let's take a look at HYG here. And this is not a chart pattern you can get excited about. I mean, it really isn't, because look, you've got the 50-day moving average running down, and it hasn't even made it up there and gotten rejected at. So as as the averages start to move forward and we see price, what you'll see is it'll start to get close to what looks like a touch there. You've got some volume here holding it, but the volume above right here, right at 82.50, has been sellers in the short term. And I hate to say it, but where junk goes, the large caps follow. And so maybe there's just a bid surge higher in the equities. And if HYG continues lower, if junk continues lower, well, look for a reversal in those major industries. Let's zoom out. And again, this picture is not pretty. We can go out a little further to pick up the spot here. And you'll know that when it doesn't follow those moving averages higher and gets rejected, it tends to go lower. So it needs some support, and it's sitting at it. That's the problem. It's sitting right here at support. Anything below that gets pretty ugly. Anyways, hey, thanks for watching part 1 of the Sunday Chart Show. We'll see you back here in a few hours or so for part 2. Thanks for watching. Bye now.